Well, it's time for some business news now, and joining me in the studio is Catherine Bennett. And Catherine, we're going to start with the chief executive of the global mining company Rio Tinto. He's stepping down along with two other executives because the company destroyed two ancient Aboriginal caves, and shareholders got very upset about that and stepped into act.
That's absolutely right. So Jean-Sébastien Jacques, the CEO of Rio Tinto, along with two other senior executives, is leaving the company by mutual agreement with the board. Now, Rio Tinto blew up the Juukan Gorge rock shelters in May this year in order to expand an iron ore mine. The caves were 46,000 years old and sat on top of 8 million tonnes of high-grade iron ore, with an estimated value of 132 million Australian dollars. Initially, the company responded to public anger by deciding to strip the executives of their million-dollar bonuses. But that obviously wasn't enough, and the growing backlash from shareholders forced them to take further action. Earlier, I spoke to our Australia correspondent, Rochelle Harrison-Pless, who explained just how profitable this region in Australia is for mining companies.
Advocates for Aboriginal heritage protection say so much has been lost over the years, either legally or illegally, and all of these losses sadly highlight the power imbalance between the mining industry and the country's traditional owners. In this particular case with Rio Tinto, the cultural significance of the Juukan Gorge caves shouldn't be underestimated. The site has been described by archaeologists as home to the dawning of humanity. It dates back 46,000 years, making the 17,000-year-old Lascaux caves in the south of France look like modern art in comparison. Now, according to the state's Aboriginal Affairs Minister last year, of the $29 billion made by Rio Tinto, a whopping $22 billion came out of the Pilbara region, which is where the caves are located. So it really just emphasises the greater need, the need for this company to have a greater understanding of the community in which it generates most of its profits.
The UK has secured its first major free trade deal since it left the European Union. The deal with Japan is based on the previous trade agreement between Japan and the EU. The UK government says that it is worth £15.2 billion. About 99% of exports will be tariff-free under the deal. For the UK, this represents a stepping stone to the Trans-Pacific Partnership. Let's have a listen.
There is an explicit commitment from the Japanese to support our accession to CPTPP. We want to create a clear pathway. We see it as a very important high standards agreement. But what I also did this week is had a meeting with all of the chief negotiators from the TPP countries. We're now in exploratory talks, and we hope to submit our formal accession plans early next year.
Now let's take a look at how the markets are reacting to that. Well, in Europe, stocks are mixed. That agreement with Japan is, of course, boosting investor sentiment in London, with the FTSE up 0.5%. But the tense talks between the EU and the UK over the Brexit withdrawal agreement are weighing on other indices in the region, with both the CAC 40 and Frankfurt DAX hovering around the flat line. Stocks in Asia closed in positive territory earlier, with the Nikkei, the Shanghai Composite and the Hang Seng Index all over 0.5%. Seoul's Kospi just about tipped into positive territory before the closing bell. In Sydney, the Australian index, S&P ASX 200, fell over 0.75% after the Rio Tinto scandal. Shares for the company's Australian arm also fell 59%, while other mining companies also saw a related dip. Moving to Silicon Valley, where Google and Twitter have announced measures to combat the spread of misinformation about the upcoming US presidential election. The Trump campaign has lashed out at the companies, saying that big tech should not be the arbiter of truth. Catherine Viette has the story.
Cracking down on misinformation on its platform, Twitter has announced new measures meant to reassure the public ahead of the US presidential election. In a statement, Twitter said the tech company will label or remove false or misleading information intended to undermine public confidence in an election or other civic process. Types of tweets that could get flagged include unverified information like election rigging or ballot tampering, misleading claims about the outcome of the vote, or premature claims of victory. It's not the first time Twitter has taken action. Last fall, the company announced it was banning all political advertising on its platform. And earlier this year, it flagged tweets by U.S. President Donald Trump about mail-in ballots as misleading. The decision angered the president, who has accused the company of interfering in the 2020 election. Twitter's decision comes as tech companies feel the pressure to rein in rumors, viral videos, and conspiracy theories that run rampant on social media. Despite fears of being accused of political bias, some platforms are beginning to take action. Google just announced a tweak to its autocomplete function in the search bar that will prevent incorrect information about election results showing up in searches. While last week, Facebook said it would ban political ads in the week before the election. The new measures come as Microsoft announced hackers with ties to Russia, China, and Iran are attempting to meddle in the 2020 election, targeting U.S. political parties and campaigns on both sides of the race.
Singapore Airlines is going to cut 4,300 jobs, or 20% of its workforce, due to what it calls the debilitating impact of the COVID-19 pandemic. These are the first job losses at the airline since the SARS outbreak in 2003. The airline expects to be operating at less than 50% of capacity until next year. The group had initially managed to resist job cuts. Because the airline doesn't have a domestic market, normally the first to recover, that position soon became untenable. And in Sudan, the country has declared an economic state of emergency. The value of the Sudanese pound has plunged in recent weeks, making the price of basic goods rise by up to 100%. The country has the second highest rate of inflation in the world, after Venezuela, at more than 143%. The government will be setting up special courts over the coming days to fight financial crime, from smuggling to black market trading. And that wraps up the business from me.
Catherine, thank you very much indeed. And we're going to take a short break here on France 24. Don't go away, much more still to come.